Yo, what's up guys? Welcome to This Just In. Thank you for joining me today. In this video, I'm going to be showing you how anyone can make a ton of money by investing in a S&P 500 index fund. This is going to be especially useful for any beginners out there, any small account traders, really just anybody that knows that they should be investing, but they just don't know where to start. There's a huge misconception right now that you've got to have hundreds of thousands, millions of dollars to start investing, and really that's just not the case. And so in today's video, I'm going to show you how to turn a little into a lot by using an index fund and being patient and consistent. So stick around. I think you're going to like what I got for you today. Alright guys, so welcome back. So first things first, obviously this video is for entertainment purposes only. I am not a licensed stockbroker. You should always do your own due diligence and do your own research. Don't just take my word for it. I know I'm pretty convincing, but it'll help you in the long term. Before we get started, subscribe to the channel. Hit that bell notification so you can stay up to date. I'm going to be posting a new video every day monitoring my small account 5X challenge, where I'm taking a small $2,000 account and trying to 5X it by the end of 2021 and turn it into $10,000. I'm just really trying to show you guys how to grow a small account and that you do not have to start out with a ton of money. So that'll be fun. Next thing, there's a link down in the description to my Patreon account. Come join me over there. It really helps me out a ton. You'll have access to my private Discord, where you'll see every time I buy or sell a stock up to the second I do it. You'll also have links to all of my different portfolios, so you can see exactly where I'm investing and putting my money at. And then if anybody needs any help, if you have any questions, if you want to see what softwares I'm using or what brokerages, come over and ask me. I'd love to help you out. And you know, point you in the right direction the best that I can. Last thing, there's a link down there to Webull. It's a great brokerage, great way to get started. When you set up an account and deposit $100, they'll give you 2 free stocks, anywhere from $10 minimum all the way up to $1,800. So you get a chance to make quite a bit of money, but minimum $10, it's free money. And then you can take that, you know, $100 that you deposited and invest in some of the stocks we talk about on this channel. So, all right, guys, so let's get started. First thing I want to talk about is how important and how absolutely crucial it is to start investing as soon as you possibly can. If you even wait, you know, 5-10 years, it makes all the difference in the world, and I'll show you that in a second. One of the biggest reasons why beginners can't find success or lose money when they start investing is because they are not diversified enough. Diversification is huge. You know, when you put all your eggs in one basket, you guys know how that turns out. Usually not very well. You know, you can get lucky and find some good stocks that run up, but over the course of the long term, you want to make sure you're diversified. And that's why I really like the S&P 500 index. The S&P 500, for those of you guys that don't know, is the largest, or 500 largest U.S. companies on the stock market. It pretty much just takes what they all do, averages it out, and then gives you that daily. And so it's a great way, you know, to start out investing. In my opinion, one of the most low risk ways that you can invest, especially over the course of the long term, because they're all big cap, large companies, not small companies, and there's 500 of them. Let me show you why. Let me show you why I like that account so much. So over the course of the last 90 years, 95 years, since its inception in 1926, the S&P 500 has had an average rate of return of around 10% yearly. I think it's around 9.8% to be a little bit more precise. We'll go with that because it's a little less and more conservative. But let me show you if we take that 9.8%. So if you were to invest $1 at age 20 and you were set to retire at age 65 and you get that same 9.8%, that $1 will turn into $67.16. But if you were to take that same $1, wait till you were 30 to invest it, so 10 years later, you get that same 9.8% return. You will only have $26.37. Guys, that's less than half of the money, but not half the time. It's only a fourth of the time. And so that's why it is crucial to start investing as soon as you possibly can. And I'll show you why right here. So let's just say hypothetically, you work an average job, you make 15 bucks an hour. Let's just say you work 40 hours a week. That would be $31,200 a year. And the key here is to invest 10%. Every single month, you take 10% of your check and you invest it. That is, obviously you want to try to invest as much as you can, but 10%, definitely should be the minimum for you. Let's say you get a raise every year of 3%. You start at age 20, you retire at age 65, and you start with zero, with no employer matching. Guys, if you are already working a job right now and you're already putting into a 401k and you've got a company that is doing employer matching, you really should be taking advantage of this, because if you've got extra money going in there above the 10%, it'll make these numbers so much bigger. And then let's just say you get that 9.8% return. You will have $3 million by the time you are 65, and you would have only have put in $297,000. Guys, that right there is the power of compounding interest. Like I said, you do not have to be a millionaire to start investing. Again, this is over the course of 45 years, and so you've got to be patient and consistent. But there's no reason why anyone cannot become a millionaire by investing, as long as they are saving their money and putting it in the right place. And that's only making 15 bucks an hour. Could you imagine if you were making 60 grand a year, 70 grand a year, 100 grand a year? Be exponentially higher. But I get it. A lot of people say, oh, there's no way the S&P will or the market in general will return that same 10%. Every year. And I get that. I'm an optimist, though. I think that it will continue to do the same thing that it's done for the last 95 years. But, let's just say it doesn't. Let's say it only does 7%. Well, you will still have $1.4 million by the time you're 65. And so that right there should show you guys that you really need to start investing as soon as you possibly can. There's a ton of different ways to do this. There's a lot of different ETFs. There's the NASDAQ, which is only 100 companies. That's why I like this one. There's oil stocks. There's, you can go by sector. There's so many different ways, but in my opinion, this is definitely the best way for, a beginner that doesn't have a lot of experience to get in and start putting their money somewhere. Let it grow while they're learning, more about investing in the market in general. Let me show you here one last thing. I want to keep this video kind of short. This is the index that I like, the SPX. This is a monthly chart, so each one of these bars is a month. This is the S&P over the course of the last, since this is like 1950. Look at this, just straight growth. If you come down to a daily chart, look what happened right here during the coronavirus. Boom, you lost 50, 60% of your money. But if you look, we are already higher than when we started. The market is going to go up, it's going to go down. That's why long-term and patience makes all the difference in the world. Historically, the stock market has never been lower 10 years later than it was 10 years prior. And so that's why I think this is a great way, very low risk, to grow your money. So if you have any questions, put them down in the comments. If you agree, let me know. If you disagree, let me know as well down in the comments. And I'll see you guys in the next one. Peace.